So here's another great example of just past market open. So we're now, I'm on the west-ish coast, so it's 7:38, but it's really 9:38 Eastern time when the market's open. So don't be confused by that. So the market's been open 8 minutes, and you'll notice that Humana is down significantly. It's down $9, 2%. I happen to be following Humana quite a bit. It's a large healthcare company. It's a great organization. A move like this is typically not indicative of the strength of the company. It's just the way the market fluctuates. So it's off 2%. It's been trading in a range. If we look at the 1 month range, it's been trading in a range from around the $500 range down to as low as, say, $449. So it's close to its 1 month low. If we look at its 1 year, not year to date, because year to date would be January onwards, so it'd be a short period of time, being that we're in January, you can see that there's quite a bit of volatility. This is a major roller coaster ride for a stock, particularly at this price and at this size of an organization, and in healthcare, which is a pretty stable business. It doesn't get affected that much by booms or busts in the economy. People need healthcare regardless. Obviously, there are some impacts, but it's a very volatile stock for a healthcare company. And if you see a move where it's dropping here over the last year, it's down 6.5%. If you did get stuck with it, it does have a very small dividend of $3.54 a share, which may seem like a lot of money per share, but when the share is $456, it works out to 0.76%. So it's a very small percentage, it's less than 1%, but you would get 0.76% if you held it for a year through the quarterly dividends. But the likelihood of this stock coming back in the next couple of days or even week, if you were to buy it at this price, where now it's down $11, is likely pretty good. So this is an interesting entry point from my perspective, because I think based on history and the 5-day average, I mean, this thing just really fell and plummeted here. You can see on the far right side from the 470 range or higher that it hit in the last couple of days, now down to 456. So it's very likely that it's just going to turn around and come back up. It just may take a few days to do that. And that's what I would kind of bank on here, is the fact that this is going to recover. It's a temporary little drop of 2%, and it's likely just that maybe healthcare is out of favor today. And so that could be an entry point into this stock today, and then an exit either later today if it recovers, or next week, being that today's a Friday, next week as things turn around and the stock recovers. And when I say things turn around, it's nothing that the company has to do. It's not like they've lost money or they've spent a bunch of money or they're losing revenue. None of that's known at this point, because there hasn't been any official releases from the Security Exchange Commission where they would file their paperwork quarterly or monthly or whenever something big happens that they need to share with shareholders. So there's been no news or announcements. If you want to confirm that, you can just scroll down and you can look through the company information. In the summary information, you'll see at the bottom here if there's any news. So it's just saying that they're going to announce results on February 5th, so that was a known already. But there's no other major announcements here. They were in the news a few weeks ago due to a potential merger acquisition. That's all fallen apart, so this isn't impacted by that. So it's just a rare occurrence, and these are the types of opportunities I look for to buy and then sell quickly in the next, say, 1 to 14 days to exit that position and make my 1 to 2% on this.